Hari Ravichandran. Endurance came out with Q1 results yesterday. Your sales were up 13%. You also raised sales guidance for the rest of the year. You must be feeling pretty good.
Yeah, it's been a good quarter for us. We're pretty excited about sort of the increase in revenues. We did about 11.5% organic growth rate last year. We're accelerating growth and increasing guidance, so things have been good.
And your stock is up a little bit on a big down day for the NASDAQ, so congrats about that as well. And you went public in the fall at 12, you ran up to 16, now you're around 12.50. You know, if you went public a few months later, you would have taken off like all those cloud companies. But you've been around for a while, right? Building your business.
That's right, yeah. So I started this business 17 years ago, and we've been kind of at it, and we've had a lot of focus both on top line and bottom line growth, and that's been a little bit different than a lot of the tech companies that are shooting up quite a bit, 70% plus sales growth. We're sort of mid-teens revenue growth, high teens bottom line growth, and that's a little bit different. And you know, it did feel like the IPO was a little bit mistimed for us. Absolutely.
Well, you also added 100,000 subscribers, brings you up to around 3.6 million. It's a tough business because there's a lot of real low margins. You've been around for a while. How do you add more subscribers without cutting further into those margins?
Yeah, I mean, I think, you know, the biggest thing for us, our biggest source of referrals are our own customers. About 45% of our customers come in through word of mouth and referrals. And so obviously providing a great service, helping people use the web better, people tell other people, advocacy is a huge part of how we get customers. And the best thing is that the cost to add those customers is $0. You don't spend any money on it. We've also got a huge network of referrers that send traffic to our brands and sites whom we pay on a success basis that end up bringing customers and getting them onboarded for us, and that's been a great channel for us.
And what about new products? You are lifting your revenue guidance up for the rest of the year. What new is going to bring more people in?
Yeah, I think really a lot of the momentum we're seeing is around helping small businesses grow their business. So anything that are marketing related products, helping them use the web better, content management system tools, eCRM solutions, a lot of momentum behind those, and those are all coming up in the pipeline.
And then finally, you didn't raise as much money as you wanted to when you went public back in the fall. You raised $250 million. You're using a lot of that to pay down debt. Are you going to have enough money for a lot of the programs that you want to put into place to raise that revenue?
Yeah, I mean, I think unlike a lot of the other tech companies, we make about $1 million every 37 hours. So basically, the business generates a lot of cash flow that's available to us to be able to invest back in. Going public for us really was just a checkpoint along the way where in the future, as we look at bigger transactions or bigger needs of capital, that's a huge market that'd be available to us. So I think from that standpoint, we still feel very good about the decision.
All right, thanks a lot, Hari.
Great, thank you so much. I appreciate it.
And thank you for watching The Street.